Hello and welcome to BYJU'S Exam Prep IAS. In today's discussion in the knowledge series, we will have a discussion on the topic of 15th Finance Commission. Now before I begin the discussion, if you have not yet subscribed to BYJU'S Exam Prep IAS, kindly do. And any kind of inputs, kindly provide it in the form of comments. Now let's start the discussion on the Finance Commission, specifically the 15th Finance Commission. First and foremost, the basic idea of Finance Commission is very simple. It's a constitutional body. Remember this. It's a constitutional body. What do you mean by a constitutional body? There is an article in the Indian Constitution as per which this authority, or let's say this particular body, is established. So this Finance Commission is set up once every 5 years. Although there have been various Finance Commissions, for example, the current one, which has been set up not for the period of 5 years, but for a period of 6 years. What is the reason? We'll understand it later. Please don't worry. So generally the argument is the Finance Commission is set up once every 5 years. It will give a lot of recommendations which are advisory, or let's say recommendations by nature, not binding on the central government. But most of the times what you see is the government will accept these recommendations, implement these particular recommendations. Now, what are the important points regarding the Finance Commission? The most important point is Finance Commissions are set up by the government in order to address the issue of fiscal imbalance. Generally, when you talk about Finance Commission, there are two very important terminologies. They'll basically mention a term called as vertical imbalance and horizontal imbalance. The basic idea is simply understand this. In case of vertical imbalance, we say that the amount of revenues which are collected by the central government in form of taxes are very, very high compared to, let's say, states. Whereas in terms of expenditure, whenever you talk about expenditure, the states spend much more compared to the central government. I can understand the argument here. Whenever you talk about vertical imbalance, the argument is that center and states both have the right to impose and collect the tax receipts. But when you compare between the center as the state and the states on the other hand, the center collects a lot of amount of tax revenues compared to the states. Whereas in terms of expenditure, states spend a lot of money, much higher compared to the central government. So there is a huge vertical imbalance or fiscal imbalance between center as well as states. This is generally referred to as vertical imbalance. What about horizontal imbalance? In case of horizontal imbalance, it simply represents the imbalances between the revenue as well as the expenditure among the state governments. For example, a state such as Maharashtra will have lot of tax revenue receipts, or it will be able to collect lot of amount of revenues compared to another state, maybe let's say a northeastern states or some of the other states. So the argument here is whenever you talk about the states, there is a lot of, let's say, gap between the revenue capability of these particular states, and all the states are spending certain amount of money in order to provide, let's say, healthcare, education, certain social welfare benefits, etc. So there is a lot of gaps between, or let's say there are a lot of differences in terms of their revenue capability or revenue capacity also. Hence, there is also a horizontal imbalance that is existing. So in order to address these kind of vertical as well as horizontal imbalances, the one authority that is set up by Government of India is the Finance Commission. It is a constitutional body set up under Article 280 by the President of India. Now, whenever you set up any commission like this, you will have to give them certain work. For example, let's take a hypothetical situation. Imagine you are appointed as a chairman of a particular committee and the government simply says, give me recommendation. The first question that you would be asking the government is, yes sir, I will give you recommendations. But in which area you want me to give recommendations? Please tell me that first. So generally when you come across the concept of terms of references, what does it mean? It simply means we are giving certain areas under which the commissions or the committees are supposed to give recommendation to the government. And the important terms of reference, or I should say the most important term of reference for the Finance Commission is the distribution of tax proceeds between center as well as the states. Here, understand this very important point. Central government under the Constitution of India has been allocated with certain powers to impose and collect taxes. Same thing can be said even with the state governments. But the important difference between both of them is that the central government has been allocated pan-Indian taxes. That is, those particular taxes which can be imposed and collected across India. For example, corporate taxes, income taxes, excise, etc. So it is the central government which imposes and collects these particular taxes. Whereas the states also have been given the power, but in terms of the potential of revenue, these particular taxes have lesser potential compared to the taxes imposed and collected by the center. The central government imposes, collects these particular tax revenues. Can the central government use the tax revenues alone? If you give away the income taxes collected only to central government, if you give away all the corporate taxes collected in India only to the central government for utilization, don't you think the states will not have sufficient money to spend? And as already mentioned, the state governments spend much more than, collectively spend much more than what the central government actually incurs in the form of expenditure. So the argument here is, central government will impose and collect these particular taxes, and part of these particular tax receipts would be allocated to state governments, would be given to the states. This is basically the first point here, distribution of tax proceeds between center as well as the states. Central government will impose and collect, part of this will be given to the states. Remember this is called as vertical devolution. This is referred as vertical devolution. Let's take a simple example so that you understand it better. Central government has imposed, collected 100 rupees. And by the way, any tax that is imposed by the center will be collected and considered here, except, remember this, except cesses and surcharges. Except cesses and surcharges, the taxes which are imposed and collected by the center are counted here, and part of it will be allocated to all the states put together. Let me take another hypothetical number here. Imagine the Finance Commission simply says, out of this 100 rupee, 40 rupees should be given to all the states. This is nothing but vertical devolution. And imagine, understand this, imagine out of this particular 40 rupees, the Finance Commission says 2 rupees should be given to state 1, 3 rupees should be given to state 2, so on and so forth for all the 20 plus states in India. This is referred to as horizontal devolution. I repeat, whenever the tax receipts which are collected by the center are distributed between center and the states, this is called as a vertical devolution. And whenever it is distributed amongst the states, this is called as horizontal devolution. So even if UPSC says the Finance Commission recommends vertical and horizontal devolution, statement is correct, by the way. And in fact, it is the most important function of the Finance Commission. Right? So distribution of tax proceeds between center and the states. Second one, what are the principles based on which the center should provide grant in aid to the states? Under articles, various articles are there. The government of India will provide certain assistance to the state governments, and one such assistance in the form of grants, that is basically money is given which will not be recollected by the central government. So on what basis the grants should be given to the state government? The principles, the parameters will be recommended by the Finance Commission. Third one, what measures should be implemented by the state governments to collect more and more money under the consolidated fund of the states? What measures, what parameters should be considered so that the augmentation, that is a collection of the money in the consolidated fund of the states, will increase? And finally, any other matter which is referred to this particular commission by the government, that is specifically through the President of India, that will also be considered, and recommendations might be given by the Finance Commission to the Government of India. So these are the various terms of references which are generally listed as the function of Finance Commission. But look at the 15th Finance Commission. Before looking at these particular terms of references, important points here. As earlier mentioned, 15th Finance Commission originally was supposed to provide recommendation from the period 2020 to 2025. That is for a duration of 5 financial years. But because the state of Jammu and Kashmir was converted as a union territory, the government of India basically extended the tenure of the Finance Commission. The Finance Commission gave one interim report. Remember this? This 15th Finance Commission gave one interim report that was applicable for only 1 year, 2020 and 2021. And thereafter, the final report was published or was submitted by the Finance Commission, which is applicable from 2021 to 2026. That is for these particular 5 financial years. So in the history, that is post-independence in India, there is only one other Finance Commission which has given recommendation for the duration of 6 years. Or else, I'll put it in a different way. There is only one other Finance Commission which has given 2 reports to Government of India. Now that's your homework. Try to find out which other Finance Commission earlier, apart from 15th Finance Commission, has submitted 2 reports to Government of India in the earlier phase. Now, apart from the general terms of references, what are the general terms of references? How to augment, how to increase the collection of consolidated fund of the states. The principles that will govern granting aid to the states. And the most important, by the way, on what basis, what formula should be used by the Finance Commission to provide vertical devolution as well as horizontal devolution. These 3 generally are applicable for 15th Finance Commission. But apart from this, apart from these particular terms of references, what else was given as a duty by government to the 15th FC? One, the 15th FC was supposed to evaluate the impact of the recommendations of 14th Finance Commission on the fiscal position of the central government. Why this is important? Very simple. 14th Finance Commission is known for one very important recommendation. The vertical devolution formula that was recommended by 14th FC was very, very high. In fact, it recommended that 42% of the divisible pool of taxes, one more technical term now, 42% of divisible pool of taxes. What is this divisible pool of taxes? It basically represents the central divisible pool, which consists of all the tax revenues which are imposed and collected by the central government. Right, so 42% of divisible pool of taxes should be given to the states collectively, and remaining 58% will go to center. This recommendation was very, very high compared to the earlier committees. For example, the 13th FC had recommended 32% vertical devolution formula. So you can just see here, from 32%, a sudden jump to 42%. So it was supposed to review the impact of recommendation of 14th FC on the fiscal position of the center and give recommendation. Second, what is the debt level of the center as well as the state, and recommend a roadmap. Right? What do you mean by this? The debt basically represents how much is the liability of the government. And it was supposed to review this particular liability of the center as well as the state and give a roadmap to reduce this particular level of debt. Third, what is the impact of GST on the economy? Study and give us recommendation. Recommend certain performance-based incentives. For example, a state which might have implemented a better policy in terms of controlling population, controlling expenditures under populist measures, etc. Study this and give me a recommendation. And finally, just like a revenue deficit is experienced by the center, even the states will also have certain revenue deficit. So should we continue to give grants to the states to bridge this particular revenue deficit? Give me a recommendation. So these were the other terms of references which were given by the government or President of India to the Finance Commission. Done? Now, what are the recommendations of 15th FC? Very, very important. What are the recommendations? First, various recommendations in terms of devolution of taxes or distribution of taxes has been provided. Not only the devolution of taxes, other types of grants also have been recommended by the 15th FC. And the report basically says that From 21 to 26, whatever numbers I am going to quote now is for the current duration, 21 to 26. For this particular duration, 21 to 26, the total amount of money that would be transferred from the center to the states would be 52 lakh crore rupees. It would be somewhere in the range of 52 lakh crore rupees. Out of this, the amount of the state's share, that is basically the divisible pool, from the divisible pool, how much money would be given to the states. I'll come to the formula also, give me a minute. It will be 42.2 lakh crore rupees. The grants which would be given to the states because of the recommendation of the Finance Commission would be more than 10 lakh crore rupees. So put together, the money that would be flowing in the form of grants, in the form of the state's share in the out of the tax revenue collected by the center, would totally be more than 52 lakh crore rupees. Now, some of you would be confused here. Right? You will basically say, sir, on what basis the Finance Commission is recommending more than 42 lakh crore here, etc. Let me give you the numbers now. The first very important recommendation of 15th FC is vertical devolution formula. I hope remember this. 14th Finance Commission recommended 42% vertical devolution formula. What does it mean? Central government will impose, collect tax receipts, except cesses and surcharges. Out of that, 42% would be given to states. The 15th Finance Commission reduced this or modified this from 42% to 41%. I repeat, the 15th FC has reduced this from 42% to 41%. Some of you looking at this will feel that, okay sir, we are going back. Rather than increasing, we are decreasing. Absolutely no. The Finance Commission simply says that 42% allocation was done when Jammu and Kashmir was a state. Today it is not a state. It has been basically converted into 2 union territories. So when the union territory is present, how can I give the same allocation, or when the number of states have been reduced, how can I give the same entitlement or allocation in the form of vertical devolution? That is the precise reason it has been reduced to 41%. Right? So this is the vertical devolution formula, which simply means if the center collects, let's say 100 crore rupees, out of that 41 crore rupees would be given to all the states put together. Remember this. All the states put together will get 41 crore rupees. That is the precise reason. Look at the table here. The total divisible pool is how much? 103 lakh crore. Right? What is the divisible pool? Central government will impose and collect tax receipts. That is called as the divisible pool. Whatever money is collected will be counted as a part of divisible pool. Out of this particular divisible pool of more than 103 lakh crore rupees, if you calculate 41%, it will come out to be 42.2 lakh crore rupees. So this will be the amount that will be going to all the states put together. Now, once 42 lakh crore would be given to the states, how much will, let's say, the state of West Bengal get? How much will Rajasthan get? How much will Maharashtra, Karnataka, Bihar, Madhya Pradesh, Punjab, etc. get? That would be decided based on one more formula, which is referred to as horizontal devolution formula. Horizontal devolution formula. Under this particular horizontal devolution formula, different finance commissions have taken different approach. Please understand this. The central government cannot mandate what formula should be used by the Finance Commission. It is entirely up to the Finance Commission. So the 15th Finance Commission basically has taken these particular 6 parameters, and based on these particular 6 parameters, the weightages have been allocated and the money would be distributed to the states based on their performance, or let's say based on the weightage allocation here. Now some of you look at the population and say, sir, 15% weightage is given. How do I understand? What is the meaning of it? I will just show you one calculation. Just have a look at the calculation. UPSC will not ask you the calculation. But many of you looking at the parameters will be confused. Sir, population is 15%. But how do I understand what role does it play? Let me clarify it to you. Imagine, just imagine certain assumptions here. The total amount of transfer to the states would be 100 crore. Only 2 states are there, and these particular 2 states I am going to cover only 2 parameters. One is population and the second one is area. Weightage for the population is 40%, weightage for area is 60%. And what does it mean? out of total 100 crore rupees, population would be given 40 crore rupees and the area would be allocated 60 crore. Now, how much of this particular 40 crore rupees will go to state 1? How much will go to state 2? Have a look at the calculation. State 1 has a 30% population. So, out of 40 crore rupees, 30%, that would be 12 crore allocated to state 1. Remaining, let's say 70% is the population in the second state. 70% of 40 crore would be going to, that is 28 crore would be going to the state 2. This is how these particular parameters or the criteria will be utilized by the Finance Commission to divide the amount amongst these particular states. So there are 6 parameters: population, area, forest and ecology, income distance, tax and fiscal efforts, and finally demographic performance. And Finance Commission has clearly stated out population in the sense the population of 2011, that will be considered. The income distance, there is a formula using which income distance would be calculated. The state with very high amount of distance would be allocated higher amount of funds under this particular parameter or criteria. So these are the 6 parameters which are being used by the 15th FC to allocate the funds amongst these particular state governments. Next, apart from the vertical devolution and horizontal devolution, grant in aid also has been recommended. Grant simply means one-sided flow of money. That is, just imagine this. I will take 100 rupees loan from you. What is the term I am using? I will take 100 rupees loan from you. Loan means you will have to repay this amount. Right? Again, when I say you, it literally in this example, I will have to repay this particular 100 rupees to you. But when the term grant is used, grants are one-sided. Government will simply give it to the states and that's it. States will use the money and they will not repay this particular money. So, what type of grants have been recommended? Revenue deficit grants have been recommended. 2.9 lakh crore rupees worth of revenue deficit grants have been recommended by the 15th FC to the states. But please be very careful here. The revenue deficit grants will not be given to all the states. For example, to begin with, these will be allocated to 17 states. Sir, why 17 states? Why not all the states? The Finance Commission, based on certain parameters, has identified that some of the states do not have very high revenue potential compared to their expenditures. Their expenditures are there, but the revenue potential is slightly weaker for these states. So, to basically address this revenue potential, revenue deficit grants have been allocated to 17 states in the beginning, and over a period of time, the number of states covered would actually be reduced. Sector-specific grants also have been allocated. For example, agriculture sector has been covered here, power sector reforms, judiciary, statistics, maintenance of rural roads which have been developed under PMGSY. There are 8 sectors which have been identified, and these particular sectors have been allocated 1.3 lakh crore rupees for the duration of 5 years. Now, apart from this, state-specific grants have been allocated. Certain states have been identified. These particular states, if they want to develop certain infrastructure, want to provide certain, let's say, social welfare, or they want to implement certain measures, these particular states would be allocated certain grants to the tune of more than 49,500 crore rupees. Then to the local bodies also, in order to develop certain infrastructure, 4.3 lakh crore rupees worth of grants have been provided. And finally, for the disaster management, 1.6 lakh crore rupees worth of grants have been provided by the 15th Finance Commission in its report for the year 21 to 26. Next, apart from this, a fiscal roadmap recommendation also has been provided. What is this idea here? The Finance Commission was asked to provide the debt of the center as well as the states, how the debt should be reduced over a period of time. What should be the quality of, let's say, the statistics collection or budget management, etc., which should be done by the central government. Regarding this, the Commission has basically stated that there is a lot of uncertainty as well as volatility in the economy. Lot of volatility. Because there is so much of uncertainty and volatility, I cannot simply give a recommendation which has to be followed by the state governments. Rather than this, right, there is already an existing act, FRBM, Fiscal Responsibility Budget Management Act. Under FRBM, how much should be the debt of the states, to what extent they are supposed to reduce it, targets are already there, let them adhere to it. Let them basically follow these particular targets. I will not give separate targets for them. So debt levels recommended by FRBM Act should be followed. Disclosures must be made by the center in order to eliminate the extra budgetary borrowings. What is this idea of extra budgetary borrowings? Whenever Government of India wants to borrow, they are supposed to take the permission of the Parliament. I repeat, whenever Government of India borrows, they will submit these documents in the Parliament, get the approval in the form of budget. But whenever you talk about extra budgetary borrowings, the center does not need the permission of the Parliament. Right? So the Commission basically states that one, central government should disclose how much is the extra budgetary borrowings, and second, it should eliminate the practice of extra budgetary borrowings. And finally, set up a committee, set up a panel which will give recommendations for the central government regarding, let's say, budget management, borrowings, etc. So in order to have better financial management, these recommendations have been provided by 15th FC. What about taxation? In terms of taxation, one, they have basically identified that in order to improve the tax collections in the economy, you need to increase the assets, or let's say the incomes on which you will impose and collect the taxes. The technical term that they use regarding this is tax base. Tax base basically refers to anybody or anything on which you are going to impose and collect taxes. So broaden the tax base, automatically the tax revenues would improve. Tax rates have to be streamlined. For example, capital gains tax. Government of India now is considering streamlining the tax rates, especially under the CGT. Increase the capacity as well as expertise of administration by training them, by providing them with better tools in order to increase the capacity as well as collect more and more tax revenues. And in terms of GST, this committee has stated that initial estimations of GST revenues are much higher compared to what is the amount of revenues collected under GST. There is a lot of shortfall in terms of GST revenue collection. You need to address this particular issue. And finally, from one year to another year, or let's say from one time period to another time period, a lot of volatility is there in terms of GST revenue collections, right? Kindly address it. In terms of defense, very important recommendation. The Finance Commission has recommended setting up a fund, that is modernization fund for defense and internal security, or else the Hindi name for this will be Rashtriya Suraksha Naivedyam Kosh. And the commission states that the money into this, from where do you get the money into this particular fund? You can sell certain assets of the defense, you can monetize certain assets of the defense, and whatever money you are going to get it, transfer into this particular fund. Or some of the funds from Consolidated Fund of India can be transferred. If a defense land is there, sold to the state government, money is collected, transfer into this particular, the MFDIS. Now once the funds are collected, what is the utilization? What is the use of these particular funds? You can use it to modernize defense services. You can use it to provide training, or let's say certain equipments for the state police force or the central armed police forces, or part of this can also be utilized for providing welfare for the soldiers as well as paramilitary personnel. So these are some of the very important recommendations of 15th FC in terms of defense segment. Now regarding the Finance Commission, I've picked up two questions which have been asked previously in the UPSC Prelims. With reference to 14th Finance Commission, which of the following statements is or are correct? Now looking at this particular question, some of you might be wondering, so should I read 14th FC also? Absolutely no. The reason I've given this particular question is just to show that yes, questions can be asked in this particular format by UPSC in the prelims. What about mains? Definitely yes. A straightforward question could be this way. Discuss the recommendations of 15th FC which are applicable for the duration of 21 to 26, 250 words. So first statement, it has increased the share of the states in central divisible pool from 32 to 42%. Already mentioned, statement 1 is correct. It has made recommendations concerning sector-specific grants. This has been provided in the 15th FC. What about 14th FC? No, this was not given as a recommendation. So right option for this particular question will be option A, 1 only. Second question, major function of the Finance Commission. What is the major function? To remove financial constraints for industrial development. Is it the major function? Absolutely no. To remove financial constraints for agriculture development. Can they give recommendations to promote agriculture? Of course, yes. But will it be the most important function? Absolutely no. To consider the distribution of taxes between the union and the states. Yes, this statement is true. To recommend GST rates to the GST Council for the purpose of enhancing consolidated fund of the states. No, this cannot give recommendation until unless it is asked. But even if they give recommendation, underline the term major function. It is not the major function of Finance Commission. The major function of FC is to provide a formula using which the tax proceeds will be distributed between center and states. So these are the two questions which have been asked in the last couple of years on the Finance Commission. Now let me take up certain questions from your side. What does consolidated fund mean? Consolidated fund, basically it is a fund which has been set up under the Constitution of India. You must have come across different types of funds in the polity. Consolidated Fund of India, the Contingency Fund of India, the Public Account, etc. Whatever are the tax receipts or the receipts of the government, incomes, these are contributed into Consolidated Fund. Whatever expenditures are incurred by the government, they will withdraw the money from the Consolidated Fund of India. And that is specifically what the government does in a budget. In the budget, government tells you how much money they are going to collect in the form of receipts, which will be deposited into Consolidated Fund. How much expenditure they are going to incur under scheme A, B, C, etc. from Consolidated Fund of India. Vertical imbalance. Vertical imbalance, simply understand this. You have center and state. And there is a Constitution of India. All of you will agree? We have Constitution of India. Under Constitution of India, there is one schedule, Schedule 7, which basically divides the powers among the center as well as the state. And if you talk specifically about taxation powers, most important forms of taxes which can be imposed and collected across India, pan-Indian taxes, have been given to central government. And other types of taxes, for example, sales tax, have been given to the state government. But when you look at how much revenue can be collected by the taxes imposed by the central government, it is much higher compared to how much taxes can be collected, put together by all the states under the powers given to it by the Constitution of India. So in terms of the proceeds of taxes, the central government will be able to collect more amount of money compared to state. And not just this, when you talk about, let's say, expenditures, all the states put together, they are spending much more than how much is spent by central government. For example, let me throw a data at you. Generally, when you talk about the expenditure, center spends around 55% of overall expenditure and center spends around 45% of overall expenditure, state spends around 55%. What about the amount of income, revenue collection? Center's revenue collection is in the range of 60%. In the range of 60%. From one year to next year, it will keep on changing. It is in the range of 60%. Remaining 40% is collected by the states. So whenever you compare how much revenue is collected by the center, how much is the expenditure, how much is the revenue collected by the states, how much is the expenditure, there is a huge difference between both of them, between center and state. This is called as vertical imbalance. Meaning of fiscal. The term fiscal will vary from one context to another context. For example, fiscal could represent financials of the government. In one more context, fiscal could simply mean, let's say, a financial year of the government. Okay, it will mean from one context to another context, the meaning will keep on differing. Why cesses and surcharges are not taken into account? because under the Constitution of India, that power is given to center. Central government can impose, collect these particular taxes and keep it to itself. Keep it to itself. It doesn't have any obligation to basically distribute it amongst the states. And that is the precise reason there is a lot of discussion saying that cesses and surcharges either should be abolished and brought into the basic types of taxes which will be brought under the divisible pool of taxes. Okay, so that's it from my side then. If you like this particular initiative, please hit the like button. If you have not yet subscribed to BYJU'S Exam Prep, kindly do subscribe. Thank you. Have a great day.